Hello, trade pros, and welcome to the new year. Welcome to the new decade. Welcome to 2020. This is Mark from Trade Pro Academy, and in this weekend's video, we're going to take a look at the US dollar outlook for 2020. In doing so, we're going to have a quick review of 2019, some of the key themes, some of the key drivers, and what led to the price action that we did see. And then we're going to take a look at the outlook for 2020 as far as key risks, key themes to look out for. And we're going to finish this off with a look at the technicals, a look at the charts, and see if we can use technical analysis to get us an idea of some of the key levels to watch out for in the DXY going forward in this year ahead. Now, before we go ahead and do that, if this is your first time on our channel, welcome. If you're a returning viewer, welcome back. If you guys can do us a huge favor, go ahead and smash that like button. It's really going to help us out with the YouTube algorithm. And if you're not subscribed already, make sure to take a moment and doing so, and go ahead and check off that notification bell as well. We're planning on getting you guys a lot of great content in this year. So making sure that you're subscribed and you got that notification bell checked off is really going to help you guys out in this year. So I'm going to give you guys a moment or two to go ahead and do that, and we'll see you in the next slides in a moment. Here's the agenda for today. I kind of covered it briefly. We're just going to take a quick look at the 2019 year in review. We're going to take a look at some of the performance statistics from the DXY, some of the key drivers, and then we're going to jump into the market outlook for 2020. Again, looking at some of the key drivers and risks for the year ahead, and we're going to finish this off with a look at the charts. All right, we're going to do some technical analysis and see if we can get some good levels for you guys. Now, if you're on this video here and you haven't had a chance to check out the prior video on the S&P 2020 outlook, I highly suggest that before continuing on with this video, as some of the points, especially as far as the drivers and the risks from the year prior and the year forward, are going to be concerned. Vic has done a great job covering a majority of those. I'm still going to summarize them, but if you want in-depth detail, make sure to check out that video first. You're going to see that on the information card here at the top of the screen. Go ahead and check that out before continuing on with this one. So with that being said, let's take a quick look at 2019 year in review for the DXY. All right, guys, so here's a performance summary for the US dollar basket from the year 2019. So the year opened up at $96.15. We closed the euro at $96.53. And this marks out a 0.53% gain for the US dollar basket against major and minor pairs. Now, the high for 2019 printed at 99.67. So just under 50 cents shy of the $100 round number, and the 2019 low printed at 95.03. And so that is just a quick look into what the DXY did. We're going to take a look at that in more detail on the charts, but for the purposes of this presentation, let's get into the drivers, the key drivers of the performance of the DXY in 2019. So Vic mentioned really both of these in his video, Fed monetary policy and trade wars / US protectionism. So in 2019, what we saw was a 180 on the Fed's behalf with regards to monetary policy. Going into 2019, the Fed had started a tightening cycle, and they were expected to hike in 2019. Unfortunately, that's not what happened. They did change their stance, a U-turn, 180-degree U-turn, if you will, and in fact, they cut rates 3 times. They cut rates by 25 basis points in July, September, and October, and they held rates in the final meeting of the year in December. So, as Vic mentioned, why did the rate cuts start? Well, it was likely due to the fact that the Fed wanted to sustain the current economic growth. And if you want a little bit more details, make sure to check out Vic's video on that front. Now, trade wars and US protectionism were another big theme in 2019. If you've been following the markets, you'd know that Trump was pretty vocal about his opinion on the dollar being too expensive and kind of using whatever means he had possible to kind of weigh down the US dollar. And so this is where we saw a lot of US protectionism in 2019. Obviously, the main headline was the US China trade war, but there were also several smaller stories throughout the year, namely the NAFTA trade agreement, putting tariffs or threatening tariffs on Mexico, which led to renegotiation in their trade deals. We also saw some of the same with regards to EU tariffs on cars, on some of the goods such as cheese, wines, etc. And we also saw this with Latin American countries such as Brazil, such as Argentina, etc. And so when you have US trade protectionism like this, especially when there's trade wars, that leads to a lot of uncertainty in the markets. And as the US dollar is a reserve currency, that means that they tend to catch a bit of a safe haven bid. It's a safe haven in times of uncertainty when risk appetite is not there and it's a risk off environment. The US dollar tends to catch a bit of a bid on the back of that. So we were seeing that in 2019. The dollar was catching a bit of a bid. However, once the repo operation hit in late September, that's ultimately where we saw the 2019 high form. And really, ever since that repo arrangement happened, the US dollar has been selling off. It's been weak, and that's likely due to the supply coming in on the back of those treasury purchases. So that was the year in review for 2019. Let's jump into the 2020 outlook, give you guys our view on the US dollar, what we see for the US dollar in the coming year, and some of the key drivers and themes as well to look out for as you will be trading in 2020. All right, Trade Pro. So here is the 2020 US dollar outlook, and quite similar to our stance last year, we're going to be carrying very similar approach into this year, and that approach is that of a neutral to a bearish narrative for the US dollar over the course of 2020. And the reason for that is because the US dollar long trade is a little bit overcrowded at this point of time. And, it remains vulnerable to downside should the global economy start to stabilize and improve in the coming year. And, on the back of that, if we do see, trade headwinds starting to recede, a little bit of a revival of global growth, then, that can kind of lead towards more US dollar weakness. Now, we do have several reasons for concern over the greenback, and those you guys can see on the screen here are trade war risk, they are US growth slowdown, Fed monetary policy, and dollar liquidity, as well as presidential elections. Now, this last one here, it's not going to have as much weight on the first three simply because the presidential elections are happening in November. And while there's likely going to be uncertainty around these elections, in November with 2 months in the year, we don't really see that weighing on the dollar throughout the first 3 quarters of the year. However, into the last quarter of the year, we definitely see some uncertainty coming in on those presidential elections, and I'll speak to that shortly. All right, Trade Post. So looking at the first reason of concern for the US dollar is the trade war risk. Now, into the end of 2019, there was a potential phase one deal announced between the US and China. Now, this is yet to be signed. The tentative date for a signing of this agreement is set for January the 15th. And so we're going to see what's going to happen on that date. However, there's some notes here that I have with regards to this, and that's tariffs of 25% on 250 billion worth of Chinese goods do remain in place. However, the US is going to be dropping tariffs on 120 billion worth of Chinese goods to 7.5% while shelving another round of planned tariffs. So the risk here is that if these relations kind of worse, right? If there's no deal that gets signed, then that has the potential to increase uncertainty in the markets and lead again to further risk off sentiment, which could lead to another safe haven bid in the US dollar. So under those pretenses, if the relations in this trade war get worse, that could lead to some upside in the dollar. However, that being said, as it stands, it looks like these trade war headwinds are starting to recede. And so, if that remains the case into 2020, there's not an escalation of these trade wars, then it's likely going to be the case that risk appetite's going to return into the markets, which would mean that the US dollar safe haven bid is no longer going to be a factor. All right. And if there's no longer a bid in the US dollar, that could lead to some further downside. So, that is one of our causes for concerns over the greenback in 2020. Another key cause for concern over the greenback into 2020 is US growth slowdown. So we mentioned this in last year's outlook video for 2019, and this remains a concern into 2020 as well as the US economy growth advantage continues to weaken into 2020. So we are expecting US growth to continue slowing down, and the reason for this is that the boost from the 2018 fiscal stimulus, it continues to wane, and the weight of policy uncertainty also dampens consumer activity. To this point, the majority of leading indicators of this activity, which are mainly industrial indicators, they are heading lower and they're currently in contraction territory. And so these are things such as your manufacturing PMIs, as well as your business activity, such as the business confidence surveys, which do reflect that the industrial sector is almost in recession already. So the US growth slowdown is definitely a big cause for concern into 2020, and that's something that can definitely weigh on the US dollar, and it can also affect the third cause for concern on the greenback with regards to Fed monetary policy and dollar liquidity. All right, guys, so as we mentioned in the year in review, the Fed pretty much did a 180-degree U-turn, the 2019 expectations to what actually played out. And so the Fed, they cut interest rates again for a third time this year in September. And they did omit some key language from that statement. And that is basically the Fed previously stated that they would act as appropriate to sustain a record long US economic expansion. And the intentional omission may imply a pause to rate cuts. So, what we are seeing, or what the Fed is almost telling us at this point, is that at this moment in time, they're not really thinking about raising rates right now. So, monetary policy into 2020 looks a little bit muted. We are seeing some analysts anticipating one more rate cut to kind of sustain this global economic expansion, while others are out there saying that there's no plans in 2020 and that 2021 also remains uncertain. So from the monetary policy perspective, the Fed can very well influence what happens here with the US dollar. As it stands, as far as rates are concerned, it looks like we're going to have somewhat of a muted monetary policy into 2020. And as we know, guys, generally with rate cuts comes a weakening of the currency, and with rate hikes, the currency tends to catch a bit of a bid. So we'll see where the Fed goes this year. Obviously, the trade war risk is something they're going to be keeping a close eye on, as well as the US economy growth. So both of these concerns definitely lead into this one. And so based on what we see from the first two, the Fed will likely react accordingly. So that's another one of our concerns for the greenback in 2020. And finally, the presidential elections of 2020. Will Trump win another term in office is the real question. And so this is likely going to be a major source of uncertainty leading into the latter half of 2020. And there's low unemployment and economic growth. They definitely favor a Trump re-election. That being said, there are a couple of frontrunners in the race for the Democratic Party going into 2019, and it really depends on who that primary candidate is. And the biggest cause for concern at the moment is if Elizabeth Warren becomes the Democratic challenger to President Trump in November 2020. And this is really the largest risk, simply because given Warren's leftist policy stance, this could increase the political risks. And, the economy, not the economy, but traders as well as capitalists alike are not really in favor of Elizabeth Warren and those leftist policies, as those tend to be negative towards the market and towards the economy. So, as far as presidential elections are concerned, there's definitely going to be uncertainty around the election. And obviously, with the election, there's a couple of areas to focus on. Obviously, fiscal policy is one of them, regulatory framework is another, and protectionism, as we've seen over this last year, especially with Trump in office. So there's definitely going to be election risk around the presidential elections in November. And again, that's likely going to cause uncertainty. And what generally happens around uncertainty is that we see a bid in safe haven assets and for a risk off environment. And again, as mentioned, risk off with safe haven bids likely means that DXY will capture a little bit, or rather will appreciate a little bit. All right. If the status quo remains and Trump is reelected, that is likely going to be positive. That's likely going to kill some of the uncertainty in the markets, especially around who's going to be at the helm of the White House, and that's likely going to lead to some further upside in equities and at least a neutral to a negative stance in the DXY. As again, when the risk on appetite is around, you generally tend to see an outflow from the US dollar into more risk on assets. All right, guys, so that is our fundamental outlook for 2020 with regards to some of the key concerns, key risks for the US dollar into 2020. Let's jump onto our charts now and have a look at the technical side of the charts to see where we might find some key levels for the year ahead. All right, trade pros. So here is the chart of the US dollar currency, also known as ticker DXY. And what we're looking at the moment is a large time frame. This is a 12-month time frame, also known as the yearly time frame. And I just wanted to pop on this one here just to show you guys relative to the prior year what happened in price over the course of 2019. And so what you guys can see is this single candle here. This represents all of the trading for 2019. And what you will see is that we've had quite a bit of indecision, to be quite honest. We did almost press into 100, almost press below 95, but we've kind of remained in that $5 range or so. And so on the back of this, what you will see is that our highs for 2018 were right around 97.71. In fact, that's exactly where they were. If you look at the high here, 97.71 is that high. So on the yearly time frame, what this is showing me is that yes, we did try to break out above the previous year's high, but the fact that we closed back within the confines of that high, to me, says that we have potential resistance at this level for the year ahead at 97.70s or so, with potential support coming in right around those lows at 95. That will really be that first level of support on this chart. So now that we kind of know that 97.71 is a big level, let's just mark that out here on this chart. 97.71. All right, so there's 97.71. Let's drop down now to the monthly time frame and have a bit of a closer look as to what's happening here in this market. So here we are on the monthly time frame. What we can see, we have 2019 starting right down there. All right, and so January started off on a bit of a sell-off. However, the dollar kind of recovered above 98, sold off again, and then we had our move almost into 100 before the selling came in and pressed this market back lower. The buyers tried to press this thing back up, get this back up to the previous highs. They failed right around that 98 figure, and you can see here December closed at 96.53. So 96.53 is where the monthly has ended up. And what this is showing me is a bit of topping behavior, to be quite frank. We did break above that resistance, but we were unable to continue on higher. In fact, what we saw here was the market came down, and what should have held as support for continuation higher did not. and instead we kind of broke back down below that level. So as it stands on the monthly time frame, order flow is currently bearish. All right, there's a bearish order flow in this market as it stands, dropping down to the weekly time frame. Let's see if we can get some better levels here on this market. Right, so 97.71, obviously that's going to be a big resistance for the year ahead. What we'll also see, as mentioned, let's take a look at some key lows here. So the next key weekly swing low remains at the 95.84s or so. Let's go ahead and draw a ray on that. All right, so there's 95.85. And then the next key zone I see here is actually right around these 94s. All right, there's our 94s. And you can also argue that there is a zone right around 95. So we can draw that in there as well. All right, guys, so going into 2020, our view of this dollar, as mentioned, is neutral to bearish, and that is because we are starting to see what looks like a potential head and shoulders pattern. Now, we don't typically use these kinds of price action patterns to qualify trades for us, but they can give us an idea of what might be going on. All right, and so what we are seeing now with regards to price action is this is a reversal pattern. So right now we are seeing that the US dollar in recent weeks, if we take a look back to, let's say, July up until the end of 2019, what's happened here? Right? We can see that on the weekly time frame, we've gone from making higher lows and higher highs to suddenly making a lower high and breaking to a fresh lower low right here. All right, and so this is giving us some selling pressure in this market. What is the next target? Well, the next target is that weekly swing low below 96, right around these 95.85s. That being the case, so long as the market remains below these 2018 highs at 97.71, we think that downside is more likely than upside is. Now, again, if I open up the 200-week moving average, you guys will see that the US dollar is still in an overall bull trend based on the weekly 200 MA, and that remains intact until 95. If this market gets back below that $95 handle, then we could see some sustained US dollar weakness for the year ahead. So 95 is going to be a key level for this coming year to support this macro bull trend. Back below that, we're likely going to have some sustained US dollar weakness. So let's jump onto the daily chart now. All right, on the daily chart, we are back below the 200 moving average, and you guys can see that this has not happened too often, really since 2018. All right, throughout all of 2018, 2019, that 200-day moving average has sustained prices, albeit there was a couple of deviations earlier in this year. We finally had a solid breakdown here into December. We've retested that level and we've now reached a fresh lower low. So again, looking at the price action and market structure, we are getting higher lows and higher highs, higher lows and higher highs, higher high until we came here. This was still a potential higher low until we saw this failure right here at that level. Once that failed, we saw that double top and we got that breakdown back below this 200-day moving average. That was kind of the signal there that we might have some dollar weakness. We did get a little bit of a rally back up into those 2018 highs. However, into that last week of December, the selling pressure really came out and drove this market to fresh lows. So again, as it stands, US dollar basket at the moment is showing weakness, and that weakness may be sustained into those 95, 85 levels or so. And if we can crack below that, the next level is going to be right around those 95s. That being said, if this market can get back above those 20 18 highs at 97.71. We might just make a move back towards 99.50 and that $100 mark. But until we get back above those 97.71s, we're likely going to see some further US dollar weakness. All right, guys. So I hope that you enjoyed this 2020 outlook on the US dollar. Again, we did provide you guys with the S&P 500 outlook for 2020. If you guys haven't had a chance to, make sure to check that out first. You guys have just seen the DXY outlook, and we've got a couple more assets coming out for you guys throughout the remainder of this month. So again, make sure to subscribe and check off that notification bell to get notified anytime that we drop those new videos. So hope you guys enjoyed this one. Hope this brings you into the new year with some more confidence, with some more information, some more fundamental knowledge, and some more knowledge on the key technical levels to watch out for in the DXY for 2020. So until the next video, guys, I hope you enjoyed it. Good luck and good trading. Take care.